Welcome back to the channel, everybody. I am Mick Alphaning. Holy smokes, what a day it is. Now, I'm just going to give you my thoughts, okay? I don't know what everybody's thinking about there. I know we all probably will derive different conclusions, but I've been reading multiple articles and documents about these Hinman emails. And what I'm gathering from this, and you could disagree, it's just, I'm almost flabbergasted, but I knew it all along. The SEC is just making it up as they go along. There's no way that what they're doing is legal. Just this is what I'm gathering. I could be wrong. You tell me. What are you seeing in here? If this doesn't put the bank coins, at the least utility coins, in the driver's seat in any lawsuit with the SEC, I don't know what will. Listen, let's start off with this article here, and then we'll work our way into it. Okay. It says this is from cryptobriefing.com. And it says Hinman wasn't the only official deliberating ETH security. Another mind-blowing thing. So you don't understand the technology. That's clear. Across the board, that's clear, in my humble opinion. And you call Vitalik so that you can make a decision on whether you're, as an authority, supposed to decide if ETH is a security or not. What? Which means that you're not up to speed. You're not up to the task of deciding whether these particular new assets are securities or not. You don't have the proper knowledge. You're not in that position to do such a thing, which explains a little bit more why you're making it up as you go along. Which then, if you're reading the Hinman documents, it puts a heck of a lot into perspective. Right? There's some very suspicious activities going on. We've always known it, but like I said, this puts it in a brand new light, in my humble opinion. And it looks great for us. This is what I'm seeing. But it brings a lot of new ways to look at all those meetings that the SEC had, Gary Gensler in particular, with Sam Bankman-Fried, with FTX. And then why FTX was never gone after, even though everything was completely shady at FTX. I mean, let's read this little tidbit here. My apologies, everyone. It says, in 2022, the SEC stated that Hinman's views on Ether being a security were not those of the SEC. That's another thing that it exposed. But let's keep going. While emails show the contrary. It says, recently released email exchanges from 2018 reveal that multiple U.S. Securities and Exchange Commission officials were in deliberation over Ether's status as a security. Why? Aren't the rules clear cut? That's what they said. It's clear cut, right? Let's keep going. These emails were published by Ripple in its legal battle with the SEC, which accuses Ripple, you know what their silly accusations are. It says here, the communications shared indicate that there were internal debates. So they had no idea. And you remember at one time, everyone was calling for a new regulatory body that actually had knowledge about the technology to do regulations for crypto. And that never happened. This is one of the reasons why that was occurring. Because the SEC, like a lot of governmental agencies, has no clue what they're doing. Hence the dilapidated state that the West finds itself in today. We have a bunch of people running things, and just my humble opinion, but look at the state of everything. They don't know what they're doing. Whether there's monetary policy, whether there's monetary policy with the banks, any type of financial management, holy smokes, they don't know what they're doing. And regulatorily, if that's a word, I can say regulatorily, they have no clue what they are doing. It's mind-blowing. But let's continue on here. It says, so there were internal debates within the SEC regarding the clarity of a speech given by then Director of Corporation Finance, William Hinman, in 2018. The speech suggested that Ether might not be viewed as a security. Why is that? It says, here's a quote, and putting aside the fundraising that accompanied the creation of Ether, Based on my understanding of the present state of Ether, the Ethereum network and its decentralized structure, oh, it's decentralized, is that right? Current offers and sales of Ether are not securities transactions. That's very interesting. Let's keep going. Before Hinman's speech, former SEC Director of Trading and Markets, Brett Redfern, expressed concerns that Hinman's speech was vague about Ether's status. He suggested, and here's another thing, if it was just his opinion, like they were saying, why would there be so much deliberation and debate? Clearly, if they're debating in an official status as SEC regulators, right? Whatever the mechanisms they serve within the body that is the SEC, then clearly that's a stance that the SEC is taking, which means they lied. They lied. That's unacceptable as regulators, but let's keep going on. Let's keep going. We need this. This is a spear, in my humble opinion, a spear that we can use to pierce the heart of the beast that is the SEC. Let's keep going. He suggested that if the aim was to make an affirmative statement that Ether is not a security, which he did, the language should be stronger, quote, i.e., just say it. But if the contrary, to use the language similar to Bitcoin's disclosure regime to ensure consistency, Redfern's comments left on a draft of the speech further highlighted that the draft's language could potentially create more confusion about Ether's status. The SEC's FinHub group head, Valerie Shezpanik, my apologies if I mispronounced the last name, suggested in a May 2018 email that the speech should have less detail, allowing room for further discussions. So here, quote, this is introducing a concept, and so leaving room for that discussion is good, I think. Ripple's legal team brought these emails to light as the crypto platform battles that we know. Let's scroll down here. So Stuart Alderati, chief legal officer of Ripple, took to Twitter to detail how the SEC, quote, touted it, Hinman's speech as guidance. Once again, they lied. Now, this is a regulatory body. You're supposed to be able to, as a company, trust that regulatory body, which means that now it has been established that they'll do anything that they want to do. They've overstepped their authority bounds. They're making it up as they go along. They're not going by what Gary Gensler would have people believe. Well, there's rules are clear cut. We're going by this. Well, it seems that it is not. And if you're going to back what was before, and they definitely have, and use that to run wild like a wild animal, biting all the different companies, attacking them, then clearly you are in the wrong as well. Going by fictitious rules that you're making up as you go along. It's quite interesting. Let's continue on here. It says here, this is from Stuart Alderati, just a little piece of these tweets. He released a lot that we're going to go over, by the way, later on. It says Hinman, as a head of the SEC's CorpFin, gave a speech in June 2018 declaring that a token is not a security once it becomes sufficiently decentralized. And keep in mind, in the emails, what did it say before? Let's scroll back up. I don't know if I can find it. It says he suggested that if the aim, it was about Ether not being a security. Oh, this is what it says from the actual quote. Ethereum network and its decentralized structure, current offers and sales of Ether are not securities. Oh, because it's sufficiently decentralized. Is that so? Well, XRPL is sufficiently decentralized. You see where this is going? Let's keep going. Let's keep going. I don't know how much more that they would possibly need unless the corruption just runs so deep that even this wouldn't matter. But this is a heck of a bombshell, if you ask me. It says, although, and that's just my humble opinion, people could disagree with that. It says, and I'm perfectly fine with that. It says, although Hinman claimed that the speech was his personal view, he and the SEC touted it as guidance. That's a fact. All we need is the facts. That's all we need. All right? That's a fact. They touted it as guidance. So then SEC Chair Jay Clayton pointed to it. So they even used it as reference. Boom. Oh, man. We just keep on winning. That's how I feel. It says here, despite the SEC repeatedly flip-flopping on the significance of this. Yeah, at their convenience later on. A lot of liars do that. You get caught up in the lie, and now all of a sudden, no, it was this way, it was that way. Start changing things. That's how you know when something's not true. But you got to get to the root of it, and that's exactly what they just did. They got to the root of it. It says, despite the SEC repeatedly flip-flopping on the significance of the speech in litigation, of course, because they don't want to lose. And we have already established they're willing to do whatever it takes, include lie, cheat, steal, possibly, allegedly, right? I mean, because if you're helping FTX, and FTX was known to give money to multiples of organizations, they said over 300 politicians received money. Who are those politicians? They never put out the names, did they? That's a fact. That's what they said. So I'm throwing that in there. Why multiple meetings with Gary Gensler and FTX is one of the worst exchanges of all time, and yet nothing happened to them when it came to the SEC. Come on now. Come on. Something's wrong there, in my humble opinion. But let's keep going. I'm just using that to establish a character, right? Character of the SEC is definitely in question. It's horrible. But let's keep going. It says, it remains on the agency's website. I think they took it down now. Did they take it down? I'm not sure. It doesn't even matter. Let's go. Let's keep it going. They can keep it up. His evidence. Keep it up. Why not? Right? It shows the significance of it, doesn't it? That they kept it up, right? All right. So now, this article here is from zcrypto.com. And it says, XRP primed for massive upsurge as SEC case tilts in Ripple's favor amid huge reveal of Hinman files. So it says here, XRP native cryptocurrency for the Ripple network has witnessed an impressive surge following the public release of the highly anticipated Hinman documents. On Tuesday, the popular cryptocurrency soared over 7% to tap 56 cents at noon. This price movement was met with enthusiasm from investors, also profit taking. I saw it was down a little bit, but that's going to happen. Listen, I said it from the beginning. If you watch those videos I put out a while back and I gave certain price ranges and such like that, you'll see that long ago, a couple months back, I even said, like, once, if there's an explosion in price at first, it happens in degrees, it happens in waves. The first wave I'm looking for is like $3 to $5 after the announcement of victory over the SEC. $3 to $5 is what I said. Go check that video out, right? And then the next one was like $8 to $10. I did one for 15 to 20. I did a couple of different ranges, but there's going to be volatility. That we know. This always occurs. There's going to be profit taking. We know that. We know that. And we're prepared for that. We've gone over so many different things, but we can't do it every single video, right? So I understand some people, and I'm saying this because I saw a couple of comments talking about certain ranges and the definition of explosion. Explosion means something different to everybody. On here, you know, you're sort of making up your own mind about what an explosion means to you on this channel, what price you're looking for. That's up to you here, you know, because we don't know how much XRP you might have, what you're looking for, what you need for yourself to be seeing disgusting gains, for lack of a better word. That's completely up to you. So explosion means something different to everyone, but there's going to be volatility at every level. People are going to scrape a little bit off the top for a variety of reasons, right? At least that's what I expect. Okay. So it says here, the price movement was met with enthusiasm from investors as the reveal is a significant development in the ongoing legal dispute between the cryptocurrency firm and the US SEC. In a tweet, Ripple CEO Brad Garlinghouse expressed his optimism about the potential influence of these documents on the lawsuit, saying he believes, quote, they were well worth the wait. I would say so. Now, and I'll say this, even if, let's say, the lay person doesn't think that they're significant, and I don't know why they wouldn't think that they're significant, because from what I've been reading, I'm just saying to myself, whoa, this is some very, very lethal information in the right legal hands, in front of the right legal eyes. In my humble opinion, this is a lethal weapon here. But like I said, it depends on, there's a lot of it's going to depend on how deep corruption goes. Hopefully it's not that deep, because if it's not, this definitely was a shot, boom, to be heard, in my humble opinion. So now we're going to get to this this article here, and it's from U.Today, and it's titled, Ripple submitted 6 new filings in ongoing lawsuit with the SEC. So let's see what's going on here. It says Ripple Labs Incorporated has made more proactive moves to show it still has a strong grip in its legal brawl in the United States with the United States SEC. Today, the company made 6 filings, with one prominent filing voicing strong opposition to the request for summary judgment by the market regulator. In the 89-page filing, Ripple shared its insights into the many inconsistencies. This is why the Hinman documents is so crucial, important. Into the many inconsistencies in the argument of the SEC, for which it wanted a summary judgment. Ripple Labs revealed that the market regulator has not to date proven its theories regarding the common enterprise that XRP holders invested in, that the XRP token itself is a security, and that the company and its executives are guilty of what it is accusing them of. Using the example of a diamond purchase, Ripple said that investment in or purchase of the precious stone does not put the investor in a common enterprise with De Beers. Great example. Great example, Ripple. You're doing a good job here, in my humble opinion. So Ripple Labs also emphasized that buying the US dollar is not necessarily a gateway into common enterprise with the US Treasury Department. Wow. They are really, really laying it on heavy here. This is one of the ways that I feel shows that they're close to victory. It says, riding the logic of its argument, Ripple Labs wants the court to deny the SEC's request for summary judgment on the aiding and abetting claims laid on the company and its executives. The SEC is completely insane, in my humble opinion. I mean, look, when I look at this, I'm not just looking at the SEC. I'm looking at a lot of these governing bodies. And I continue to think about the corruption that's there. Then I think about possible solutions for that corruption. But it would take a strong people to enact those solutions. And then I have to weigh the possibilities of, do the people have that mental strength, that heart to do what's necessary, which I won't talk about right now, my assessment of that. So when I'm taking this information in, I'm thinking about these in a multi-dimensional way. So I'm just not always able to convey it here. It would make these videos extremely long, and I'm not sure if people actually want to hear that analysis. So now, let's move on to another article here. So this article is from U.Today and it's titled, Ripple Partner Novati Launches Stablecoin Innovation on the XRPL. So let's scroll down here and let's give this a little bit of a read. It says, Ripple on-demand liquidity partner Novati Group has announced that its one-to-one fiat-backed stablecoin AUDD is now live on the XRP ledger. So more big things happening on the XRP ledger. A range of use cases, including remittance, gateway, trading pairs, and stablecoin as a service, would be served by AUDD as it is being integrated into Novati's current array of payment solutions. I want to pause here for a moment. Now, something interesting that David Schwartz was talking about the other day is XRPs for everybody. Then if you look at that new CBDC platform that they built, they were going after retail. Why? Why are they doing it all of a sudden? There's this focus on retail now, right? I think it's because of the problem that may occur with fiat currency in the future. So they have the actual tweet here, and it says, the next evolution in global payments is here. At Novati Payments has announced its one-to-one fiat-backed stablecoin, AUDD, is now live on the XRPL. Read how this deployment marks an important inflection point in the journey toward the Internet of Value. So that's very good. So a lot of big things continue to happen on the XRPL. So now let's move on here. So we have this little bit of Stellar news here. So Stellar put out this tweet. It's about 4 hours ago. It says, quote, there are multiple blockchains out there, but Stellar was built with cross-border payments in mind. Transaction fees on Stellar are so minimal that there's negligible cost for quickly moving an asset across Stellar, says, and here's the important part, this was said by Luther Madej, if I'm saying the individual's name correctly, but that's not what's important. This individual is a representative of MoneyGram. This is some of the best advertisement you could ever get. And I think Stellar is seizing the moment. While they don't really have any troubles right now, they just did that massive thing with Franklin Templeton. Franklin Templeton is running all around telling everybody how great Stellar is. That could bring in more business. This is great advertising for MoneyGram. You have BPV running wild. You have Stronghold saying, wait a minute, BPV, hold on, step back for a second. Let us take the front seat. So they're doing extremely well also. And I think Stellar is saying to himself, wait a minute, there's opportunity here. While there's blood in the water everywhere else with all these other blockchains, we're kind of free to rack up business, bring in new business. And so they're pushing really hard as of late. I won't just say Stellar, but it's pretty much all the businesses across Stellar have been pushing hard. Have you noticed that? So I like to see this. I want them to advertise more. I want more business as much as possible. I want as many Stellar wallets in people's hands as possible. So MoneyGram, yeah, it's about time. Keep talking about Stellar. Stellar is helping you greatly because let me tell you something right now. They're going to keep you relevant because you were having a hard time before you integrated with Stellar. And now look how many more opportunities have opened up for MoneyGram, which is something that other companies are witnessing. Why do you think Franklin Templeton just jumped in and they're so overjoyed about being able to use Stellar? You heard how they praised them. So over time, and I'm not saying now, but like I said, in due time, because right now crypto has a very, very negative light on it. But once that light comes off of it, you're going to see company after company popping out, wanting to build on Stellar or saying, hey, we're using Stellar. This is just my personal belief. It's not financial advice. But I think going by all the logical information that we've seen, that's where the direction and energy is heading. This is my humble opinion. All right. I have to always say things like that. I don't want anyone to feel like I'm an authority and I'm just sharing my thoughts. Just like I appreciate when you share your thoughts with me in the comment section, right? It was kind of a team effort over here. All right. So I just wanted to point that out because this was really, really good. They have a little video here. So if you haven't seen it, head over to Stellar's Twitter and give this video a watch. Give it a watch. This is pretty good. All right. So this article here is from dailyhodl.com and it's titled U.S. Treasury to borrow $1 trillion in 6 months. Analysts warn move may trigger banking exodus. Everything they do, they're in an inescapable oubliette. You know what an oubliette is? They're in an inescapable oubliette. And it just seems everything that they do is leading to banking troubles. Says analysts say U.S. banks could suffer a massive flight of deposits if the Treasury goes ahead with a plan to restore cash balances by borrowing over $1 trillion. I told you there was going to be a liquidity drain. Didn't I tell you that? I told you it's coming. Here it is, folks. Get ready. Get ready. This is great for the new financial system, but people who are dealing with the banks, just be careful. That's all I'm saying. Be careful. Know if your bank is healthy. It's okay to give them a call and say, hey, is everything going okay with the bank? I don't know what information they're going to tell you if they're going to be truthful or not, but it doesn't hurt to actually ask and do a little research. You protect your money, protect your value. I mean, you can do what you want. This is not advice, but let's read a little bit more. It says JP Morgan analysts estimate the U.S. will need to borrow. Well, it's not just JP Morgan, didn't they? I'm trying to remember where I saw that from. I thought Janet Yellen spoke on this. I'm pretty sure Janet Yellen spoke on this, but let's continue on. It says JP Morgan analysts estimate the U.S. will need to borrow $1.1 trillion in short-dated treasury bills. Didn't I say last video? I think it was last video. I said, who's going to buy all these treasuries? By the end of the year, reports the Financial Times. So it is reputable, JP Morgan and Financial Times. Analysts say the higher yields now expected on government debt will suck deposits out of U.S. Of course. Who's not going to want some of that money? Will suck deposits out of U.S. banks as customers become unsatisfied with the inferior returns offered by their savings accounts. Now, look how that works. They were worried about crypto when crypto was they were offering disgusting gains with staking. That was a long time ago. Disgusting gains with staking and lending out your crypto, all this stuff like rewards, all these crazy rewards programs that were out at the time. And so now that crypto is by the wayside, here comes the U.S. Treasury like, oh, we're going to give you a little extra on top. Right. So now the banks are still going to be in trouble. The banks were, I said this before. I know I'm saying that a lot, but it's true. It was about a year ago, maybe a year and a half ago, I was saying how the banks are concerned about crypto when really they should be concerned about two things in reality. One, the bigger banks, and two, the US government. That's what I said. Now look, they're being put in trouble by the Fed raising interest rates. They're being put in trouble by the Treasury now. They're going to be releasing these T-bills, disgustingly delicious, short-dated T-bills that people are going to try to make some money off of course. It's unbelievable what's going on. But anyway, let's continue on here. And why would anybody keep money in their savings account? And it's just dying there. They're giving you such a tiny little percentage. Why would anybody not go into T-bills or anything else for that matter? You know, that's pretty much almost everything superior to a savings account at this time. It says, Gennady Goldberg, a strategist at TD Security, says, quote, everyone knows the flood is coming. Gennady, I tried to tell people, sir. I tried to tell them it was coming. Yields will move. We've been talking about T-bills. Yields will, maybe I posted that in the members only. I'm not sure. But we've talked about it on channel a few times, T-bills. It says yields will move higher because of this flood. Treasury bills will cheapen further, and that will put pressure on banks. Oh, banks, your time is coming. Hey, come right to the new financial system. Right, come right to us. Doug Spratley, head of cash management team at T. Rowe Price, says the Treasury's plan to borrow trillions, quote, could exacerbate stresses that were already on the banking system. They had over 900 banks at risk. So now they have to worry about commercial real estate. They have to worry about the unrealized losses that nobody's talking about anymore, that hasn't reared its ugly head yet. And they have to worry about this coming liquidity drain. Banks are in trouble. They're in trouble, folks. Maybe they make it through. I don't know. They have tricks up their sleeve, but they're in trouble, to say the least. It says, according to stats compiled by the Federal Reserve Economic Data System, FRED, American banks have witnessed nearly $910 billion in deposit flight since May 2023. Wait a minute, but to be fair, to be even across the board here, okay? They did have a return on some liquidity as of recent. Okay, so some funds did return, some deposits did return. The problem is that I believe that that's temporary, given everything that's going on right now. That anything can happen, any bad scenario can happen at any moment, because there's so much at risk. There's so many problems looming over their heads, is what I'm saying. That liquidity will leave and it will fly away in a blink of an eye, for lack of a better word. My apologies. I'm not so eloquent today. Although some has come back, I'm just trying to stay balanced in how I'm looking at these things, right? And trying to give everybody as much information as is significant, right? Since in May of last year, the amount of capital held by banks on behalf of depositors sat at 18 trillion compared to just 17 trillion today. All right, so now let's move on here. So then I wanted to cover this little article here, right? So this article is from Cointelegraph.com, and it's titled, Hong Kong, United States stablecoin regulations in 2024. So we're back to 2024. It's supposed to be a massive year. You have the regulations are supposed to roll out in Europe. Now, we're going to read this, but I just have a hard time believing U.S. is going to do anything. Hong Kong, definitely, they handle their business. They do a great job over there. You know, Wall Chiwan. But U.S., I'm not so sure about that. It says U.S. is currently working on stablecoin market regulation. Oh, I guess is this from the Congress or those people that they had a bunch of bills that they were just throwing out. I don't know which one is actually going to stick. It says currently working on stablecoin market regulations and introducing 3 drafts of the bill by the first week of June. All right, let's scroll down here. And the reason I say that is because they've discussed things like this before and nothing has materialized. Nothing was done. It didn't go anywhere. So that's why I'm very skeptical when it comes to the U.S. The Hong Kong Monetary Authority has completed a public consultation on stablecoin regulations and aims to introduce clear regulatory guidelines for the stablecoin market by the end of 2024. And I believe them because they get things done over there. All right. And keep in mind, I want to say this again and make it clear. Hong Kong, just like they have the Hong Kong dollar, as opposed to the yuan, renminbi, they have their own way over there. They're different than mainland China. You have to understand there's differences everywhere. Okay? All right. So, and they get things done very efficiently in Hong Kong, right? All right. So it says, Joseph Chan Ho Lim, under Secretary for Financial Services and the Treasury of the government of Hong Kong, said that over the past 5 years, Hong Kong has emerged as a growing destination for fintech firms. That's a fact for sure. Chan added that authorities are actively working to promote Web3 ecosystem with a focus on investor protection. Hong Kong started discussions on its stablecoin regulations in January 2022 with HKMA, and they don't waste any time. They get a lot done very quickly. You read over a lot of those transcripts and documents from over there, and you see how efficiently and quickly they move. It says sharing a list of 8 questions about policy-related recommendations and citing 5 possible regulatory outcomes. 1, no action. 2, an opt-in regime. 3, a risk-based regime. 4, a catch-all regime. 5, a blanket ban. Look at all the information they're dropping here in an article. In January 2023, the outcome of regulatory discussions outright prohibited the incorporation of algorithmic stablecoins in its stablecoin framework, with the HKMA demanding all stablecoin issuers back up their values with underlying reserve assets at all times. They're getting right to the crux of everything, making sure nothing can go wrong. All right, and I expect them. Listen. They're going head to head, in my humble opinion. They're neck and neck with the UAE. Pretty much with the entirety of the MENA region. They've been doing a great job over there as well. They know how to get things done as far as being the hubs, the crypto hubs of the world. All right. So now this can be very interesting because, you know, a lot of bank coins are deep in various parts of the world. And I do believe that they will glue everything together when it comes to the different CBDC systems. Right? That money will flow. Trillions, quadrillions will flow, but it will take some time. All right. So now let's move on here. I wanted to cover this article. We're not going to take too long on this one here because I find it funny. This article is from pionline.com, pionline.com, and it's titled Vanguard Takes Institutional Lead Over Blackrock. What? But listen, I want to just put this out there that there is no competition between Vanguard and Blackrock. Do you know why? We've covered this before. We used to cover Blackrock a lot. There's a Blackrock a lot and Vanguard as well. I don't do it anymore. There's a certain reason that I don't. But I'll say this. Blackrock are the biggest holders of Vanguard. Vanguard is the biggest holder in Blackrock. They both own each other. There's no competition. They are literally one entity going by separate names. They own each other. All right? Or a lot of people don't know that. They think they're separate. It doesn't work like that in the world. Things like when you're at the top, you start to learn, and it doesn't matter whether it's companies like BlackRock or you look at companies in the entertainment industry. If you see multiples of powerful companies, typically that's just an illusion. Look beyond that, you're going to find they're either all merged together and they're just operating by separate names, or one company at the top that's never spoken about owns everything. They own the company, right? Or two that own a bunch of other companies that own a bunch of other companies. That's typically how it goes. So when I see an article like this, I think it's very misleading because people, a lot of the regular people out there, non-researchers, they've heard of BlackRock and then they've heard of Vanguard, but they don't know like semantical information like what I just stated before, that they own each other. All right. They don't go against each other. They're like one entity there. All right. The only one I'm not sure about that's in there, and I think that they're owned as well. A big percentage of, I think it's Blackstone. Blackstone is also a large part of them is owned by BlackRock and Vanguard. But don't quote me on that one because I'm not so familiar with Blackstone. I'm more familiar with BlackRock and Vanguard. All right, so now we're going to end off here with a little bit of gold, silver, platinum news. And what I just said before is something to keep in mind when you're out there in the world. If you make it to the top of anywhere, all right, and I'm speaking from experience, it doesn't matter if it's sports, it doesn't matter if it's in the movie industry, you're going to see that there is a congealing of power at the top. Whether people like that truth or not, whether they believe it or not, you're going to find out. Simple as that. All right. And that affects how one can move around depending on if you acquiesce to the rules that those at the top are setting. And there are rules. All right. So it's something that you have to keep in mind as you're starting to move up in the world. If you want to go as far as you could possibly go, then that's something definitely to keep in mind. I'll leave it at that. Be careful out there, folks. So now, oh man, we're going to end off with a little bit of gold, silver, platinum news. So this is from fxempire.com and it's titled, Platinum Dives Below $1,000. Oh man, I'm so worried about platinum. Not worried at all, not even a little bit. This is expected. Also, platinum skyrockets like unbelievably, quickly. So it's like we're used to the volatility of platinum. Not worried about it. Then on top of that, keep in mind the shortage of platinum that's coming. That hasn't been felt yet. They had to shut down or are in the process of shutting down a lot of these facilities that produce platinum, right? Mining facilities and etc. Because of a load shedding. They don't have the energy to do it. Electricity, they can't do it. So that's expected to be felt. That shortage of platinum is going to be felt at some point. It's estimated to be felt probably by the end of this year, but we'll see. Who knows? There's no guarantees of anything. Maybe they solve that problem that they're having. I don't know. But as of now, that's where it stands. There's going to be a shortage of platinum. Well, we'll see how that goes. So it says here, gold is moving lower as U.S. dollar gains ground. At the start of the week, traders are somewhat cautious ahead of the Fed decision, which will be released on Wednesday. A move below the 1950 level will push gold towards the support at 1930. On the upside, gold needs to settle back above 1980 to have a chance to gain sustainable upside momentum. Let's scroll down here a little bit. Silver pulled back as traders took profits off the table after the recent rebound. Stronger dollar and rising treasury yields. It's going to affect everything. Rising treasury yields served as an additional negative catalyst for silver and for everything. A move below the support at 2380 will push silver towards the 2350 level. If silver declines below this level, it will head towards the next support at 2325. Platinum tested new lows as traders remain focused on recession risks. They're still saying recession, given everything that's happening out here. If platinum settles below the support at 980, it will head towards the next support level at 960. A successful test of this level opened the way to the test of the support at 930, which will probably trigger a buying frenzy. Platinum going that low. I love platinum, by the way. I do. It's an on and off love, but I do have it. I love gold more. Right? Not gold jewelry and none of that. Give me a brick of gold, then I'm okay. I like bricks of gold. All right. I don't like not all that other stuff. I don't like coins with a picture on it. No. Although some of them are kind of interesting, but no. A gold bar. That's what I like. All right. And the platinum bar is good too. I don't like copper. You want to be realistic? I like copper too. I just don't have any copper. I just don't. I like looking at copper. I don't know why. I'm fascinated with copper. I like copper, but I just don't deal with copper. I just don't. But yeah. So anyway, all right. So that's the news for today. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.